And what about the capital growth of these sorts of properties? What can a person expect if they buy it off the plan, say, by the time it's finished? What sort of a increase could they potentially be looking at?
Yeah, capital growth, it basically still works like a traditional normal house and land, basically on the normal capital growth.
Okay. Okay, what about if the upside of a completed product being more attractive to a potential investor who doesn't want to wait? They'd be probably willing to pay a bit more money for that as well, wouldn't they?
Yeah, true. Yeah, true.
So,
like we've actually we've tested it in every way.
Yep.
And it's actually we've had evaluations and sworn valuations on our product, and it's come up really well.
Because the question I often get is, how much capital gain can you get from a rooming house with those 8 to 11% yields that we have been showing you in some of our other videos? So I want to show you some examples of sale values immediately after building was done and they were fully tenanted. And look, most of these properties that I'm going to show you have shown an increase between 16 to 27% and more in value once they're built and tenanted, such as the one there on the right. Let's have a look at actual completed rooming house sales. Now these ones are in Brisbane, and these are recently completed rooming houses. They all made a great capital gain for the investors in less than 12 months. So they were resold immediately after they were finished. And here's one of them, rooming house making $245,000 profit in less than 1 year. Plus it was sold with a 9.75% yield. So there you can see the off the plan sale in 2023. It sold for $1,040,000. Now that was for a property on one of those two blocks there. And the projected rent at that time was $101,386 for a 9.74% gross yield. Now, less than 12 months later, that property was resold, right? Fully tenanted, fully completed for $1,285,000, which was a $245,000 profit. And the investor who bought it with a 7.88% gross yield. So as you can see, if you're buying a completed property, you're paying a lot more for it and you're getting a lot less return. Now here's the second one. Now this one was again $270,000 profit in 11 months, plus it was originally sold with a 9.88% yield. That's how it was sold there off the plan. It looked like that photo. It was sold in 23 for $1,080,000. Now, the projected rent was $106,650 per annum with a 9.88% yield. And this is what happened as soon as it was completed. It was sold, 25% increase. It was sold in 2024 for $1,350,000 and $270,000 profit. And again, 7.9% gross yield. Can you see that there's a pattern there in these resales, right? The price jumps up, the returns drop. That is the price you pay when you're buying a completed property as compared to an off-the-plan investment. Now, this one is $330,000 profit in 12 months. And again, this was what the profit looked like. It sold for $975,000. It was actually split into two, that block of land, right? And there was going to be two houses built on that. And they resold for $1,100,000 each off the plan. Now, less than 12 months later, once again, that's what the property looks like now. And each completed rooming house resold for $1,430,000 and $114,400 per annum income, which is $2,200 per week. That's almost a 30% increase in less than 12 months on that particular investment. Now, wouldn't you like to be getting a share of that capital growth? I know I certainly would be. And look, here's where you can actually do that with a property that's available right now. This one is in Ballarat. It's $870,000. It's going to be sold in 2025. It's got 5 bedrooms, 5 bathrooms, 5 lounges, 6 kitchenettes. The off-the-plan sale is $870,000. The projected rent is $91,000 with a 10.4% yield. And here's what the potential property value could be upon completion based on the numbers I've just showed you, what happened with those other resales. So based on past resales, if you get a 15% increase, that $870,000 will be $1 million. If you get a 20% increase, it'll be $1,044,000. If you get a 25% increase, it'll be $1,087,000, which is $300,000 more than pretty much what you've paid for it. right? So that's a fantastic capital growth. You know, if obviously we're assuming that the prices are going to follow the resales of the other ones, but we can only go by what's happened in the past, so we can't obviously predict what's happening in the future. But here's an example of a finished product versus off the plan. So if you want to buy a finished product, this one, 1,350,000, right? 7.9% return, that's what you're going to be looking at. Or you can buy Ballarat, 10.77%, 854,000. This one's already been sold off the plan with a 10.77% return, and it's on $854,000. So that is the difference between buying a finished product versus off the plan. So if you're thinking, oh, but you know, will the property prices keep going up? Well, let's have a look at the last 30 years property value graph. Look, Australian properties are going up, up and up. There is still more houses needed because the population keeps growing. We're expecting another interest rate drop coming as well. So there's going to be some real opportunities. The market is about to go up again, and the rent demand is off the roof. There is not enough properties, and that's why these rooming houses make such a good investment. If you want to look at 140 years price growth in Australia, again, look, since the Korean War, you know, before the Korean War, it's just been going up, up and up. Since the World War II, really, right? There's been a steady growth in property prices, so I don't think it's going to change anytime soon. Don't be the person that looks like a skeleton waiting for the prices to drop.